So what I want to do this session, I want to talk about the pre-open and particularly the open 5. We're going to talk about that primarily, but and I'd like to do some trading if we get some good action. I just tried to do some mini trades, and the risk is way too extreme to be trading minis right now. I cannot make the minis work. You can get lucky and get big winners, but the action is putting you at too much risk to do that. There's just sweeps that are way too big. So it continues to be a micro market, and certainly you can scale in up to mini quantity, but it gives you some flexibility to not do that or to do fractions, half a contract and a half, and that's the right answer. Scaling down into this kind of craziness is the right answer. And we had been pretty stable in the ebb and flow. Kind of the price action was pretty stable when we were doing our live session earlier, and then we had a burst of buying, and I traded that a little bit, and I was trading with the minis, and it was really hard to manage risk despite the overwhelming high momentum we had. And we still have a directional move, but it's trading in a large range, and just the 15-second LRC range now is 54 to 60, 6 points. That's just way too big to try to scalp with minis. You can end up off sides and instantly be underwater by a couple $100, and that's not manageable. But the action's tradable. You just have to scale down and be prepared to take more heat and make sure you're really, really focused on getting good entries and not just taking any trade that comes along. Be really particular about what trades you choose. So that is the context at the moment for the pre-open. Now, let's look at the structure for the pre-open. Right now, the structure looks like this. We have price rejector at the bottom of the current period. The overnight has one more period, which starts in 9 minutes, and then we start regular trading hours. It's important to note also that at the moment, we are trading above big delta, and with the price rejector, that's a pretty firm combination that buyers are in control up here, at least getting us up here. Whether they continue to be, maybe not, because you see the top of that same rotation's pretty clean. So, we pushed up really strongly, but the criteria I use as a scalper, is this momentum likely to continue? Well, not only is it not necessarily likely, it's actually not continuing right now. It's actually going down at the moment. So this is one of those cases where you've got high momentum that you don't just join, because it's starting and stopping very abruptly. And so that's the context of where we are with respect to the current 30-minute rotations. Interestingly, we have, the overnights are real far away at the moment, and it doesn't look like either of them have UB, so at least on ES. So that is also interesting, relatively orderly market, and we're in the middle of a fairly good size range. So, excuse me, I'm yawning. So just checking on everything else. Oil punctured 100 and is holding at the moment, the far left here. Gold, as we were talking about it during our live session, traded off of 1930 all the way back to 1915. So there's actually a good short there, but we talked about that setup, and I just said, gold's just been too thin. But that was a good signal to be looking to take profits in the double ETF that I have on. And actually that's trading now, so I'm going to do that in a minute. Maybe at the open, we'll see. That might be able to get out at a better price than that and get a little more of the profit if it retraces back up. Meanwhile, the indexes are, the strong move off of the low that's, middle of the range at best. So, anything can happen from here, and it's a very unpredictable spot. So given that and that, so this waning up momentum into the middle, and the other thing that's notable is there's high volume nodes on both sides of us. If you look in the middle here at the volume profile, there's a high volume node above us from the overnight, and there's one below us, and we're in the low volume node right now, which is typical. We're filling it in, which makes sense. The trading is more or less at value and symmetrical. Then ultimately this will look more like a bell-shaped curve, and the middle is empty right now, and we're trading there. So obviously it's filling it in. So that collectively, all of those little pieces of information tell me that there's nothing really interesting right here. In fact, it's really dangerous right here. But that is a really good kind of preface for what the Open 5 looks like. So this is a very, very specific setup. So we are talking setups now, and we're doing it within the context of the Open 5. So the Open 5 is a momentum trade, and it's a very particular type of momentum trade. So I'm going to spend time speaking just to that. Remember, HMOMO is about the following. We have a little cheat sheet here. Whoops, wrong browser. Little cheat sheet that I put up in the pit. Let me bring it up again, and we'll look at it. And it is, sorry, set up bullet points. Okay, so if we're looking for HMOMO, join or sit on hands, continuing or likely to nearby IPs. Okay, that's generally what we want to do when there's high momentum. The Open 5 is a very specific type of high momentum. And while we're thinking the same way as those criteria, we're actually being much more specific. So for the Open 5, what we're looking to do, and you know what I'm going to do? I'm just going to see if I can stick it in here. Let's see. I don't know if this formatting is going to let me do this, but I'm going to just try something here real quick. Otherwise, I'll do this later, but I'm going to try to update this as I talk. Yeah, that works. HMOMO, Open 5. Okay. The Open 5, again, is a very specific kind of HMOMO, and it has very specific criteria. One way, that is number one. We must be going one direction. I don't care about continuing or likely to. If we have one-way momentum, it's real simple. Join with market orders. And I'm going to explain all this in a minute. And then protect with take profit stop as fast as possible. Okay. That is the Open 5, which is a specific type of HMOMO setup. So let's see if I can make that look a little clearer. Okay. There, okay, HMOMO, the Open 5 version. That's what we're looking for. We want one-way action. We want to join that action immediately with market orders. We can use limit orders to get out of this trade, although sometimes market orders are better. I'm going to explain all this in a second. And you want to protect this trade with a stop between your entry and the current trading, in other words, protecting your profit as fast as you possibly can. Okay, so that's the criteria. And why is this, and what are we trading here? What is the idea of the Open 5? And by the way, we're about to get the top of the hour rotation, which will be the last one before we go into the open. And it's also the open of oil. So just for a second, it's the pit open of oil, the old pit open. So just for fun, let's flip over to oil and see what's going on. We might be able to see a quick structural trade there. So the trade to look for right at the open of oil, you guys see JVC doing this, and he's probably doing this in his own live session soon, if not right now, is you're looking for, is there an A to overnight? And we're here with a bunch of zero prints, and the overnight is all the way up at 101.5 at the high, and the low is way down there. So the A to overnight would be up from here to, 101.5. That's probably a decent trade if it gets some momentum. So that's worth watching. What I'm going to do instead of keeping this up here is I'm going to put this back, and I'll just flip my bottom one to oil so we can kind of keep an eye on that. And if it looks like it's worth trading, we could hop over there and trade it. That's how I do that. I generally don't like to trade oil unless there's momentum, as I've said a bunch of times, but this setup looks like it could be interesting for a 3-pointer real fast. And even if we don't take it, we can watch it. Remember, the overnight high is up there. So, the trade is from here on the way there for some ticks. And it looks like that's probably going to happen down there. All right, while we're looking at that, let's go back to the indexes. And it's about to happen right now. We're about to get that A period. So let's just let it do it, and then I'll do the explanation of the Open 5. So I'll have a sip of coffee and we'll wait about 20 seconds here. If you look at the momentum here in oil, it sure looks like it is ready to do that. Here's the 15-second and the 30-minute on oil. So, and you know what? I'll put up the dome for oil too real fast. Let's see. That's gold. There's oil. So we can watch and see if it, look at the liquidity though. It's like there's a bunch of it above us. Okay, opened, push down a little more. Took out those zero prints that were sitting there. So bottom of the range right now. So is it going to make a play for it? It's obviously it's got to be going that way first, and it's not right now, but it's not going down. So right at the edge of the range. I don't like to play ranges in oil, but if you were playing this long toward the overnight, this is not a bad spot to play it. It's pretty clear if you're wrong. You've got a high volume node below you, but it's down a ways. So I just watch the action here and see if this works or not. Again, I'm not advocating this. I'm just, since it's happening right now, we might as well watch it. It's a very poor long off the bottom of the range here. It needs some momentum to become a good long, and then I'm sure it'll get to the overnight pretty fast. Here we can see where that is. And there's a lot of absorption at the overnight high up there. So I would be looking for a trade from here to maybe, I don't know, this supply up here, maybe 1-1, and there it is. There it goes. Hello, and we made a bunch of zero prints, so we caught some stops up there. There's some more. Remember, we're looking for this to get somewhere up to this supply, maybe 101, 101.25. The high is further up. It doesn't necessarily have to get there for the ADA overnight trade to work. This is it. It is working. And that's where I'd take profits right there. It's starting to pull back. So you would have got a really nice little 100, 30 ticks. Can't beat that. All right. That's a nice little example of how to trade the CLA overnight right at the pit open. And let's go back to the indexes. Anyway, any questions about that? JVC isn't here, so I'm going to kind of keep an eye on questions. Does everybody understand what that was that we just watched play out there? That oil trade, and now, by the way, it's right at the overnight high now. So that trade completed. It's gone in the distance. So anyway, let's put the oil dome away. I don't see any questions, so let's go back to the indexes. Okay, cool. Yeah, those are fun when they play out. The thing you just got to be careful in oil, CL is a lot of money. It's $10 a tick, and it moves a lot of ticks. But that was like 30 ticks there. So that's a $300 trade with a one lot. But it's also, the micros don't trade quite as smoothly in oil because they're still pretty thin in volume. So in general, you probably want to play with CL and not micro CL if you're trading oil, but just got to understand the amount of money that's involved. Oil's $1,000 a point per contract, and it trades $10 a tick along the way. That's a lot. Money can happen fast both ways. So just respect that. Okay. So here's the story behind the Open 5 trade. It's a very simple concept, and the math of it just allows us to take advantage of the simplicity of the concept. And here's what it is. Overnight, lots of things happen. There's news and trades happen and price levels get tested and taken out and blah, blah, blah. The overnight volume, though, tends to be relatively low, and not a lot of people play overnight. We've only traded 300,000 contracts, which isn't a bad overnight. But, considering we're going to trade a couple million during regular trading hours, that's nothing. And for that reason, there's a lot of large funds that either prohibit their traders from trading overnight or they heavily restrict it. Some of them have it in their charters that they can only trade from this hour to this hour. That way, nobody gets real bold in the middle of some news event or whatever. And some of them, it's just common sense. They're big players and they have a lot of money to sling. And even if they do trade overnight, they don't do it with all the money they're capable of doing it with because there's just not enough liquidity to do that. They would become the market. And that's the last thing you want to do. So what happens is everything that happened between the close last night, the Globex reopened, in other words, anything that happened between then and the open is going to get priced in by the volume players the minute we open. And that's the premise of the Open 5, is that any imbalances that there might have been in terms of what people would like to do and they are able to do overnight get resolved pretty fast. Because of that, it creates a unique momentum opportunity. And here's the statistics around it. It's about if you say there's 5 days a week of trading, you typically get a good open 5 setup about 3 of them. So the first thing you have to do on each day, is you have to really watch the open and see if this is one of the days you want to play it, because when it doesn't work spectacularly. And let me explain that. Look at the criteria that we're looking at here. We're looking for the Open 5 version of HMOMO one way. That's the most important one. And so what happens is people misinterpret one-wayness, and they think, oh yeah, that's going one way, and they jump in, and then it turns and goes the other way. So you have to get the right sense of whether we're going one way or not. And often at the open, it's very clear immediately that we're going one way. Other times, we do what I like to call the head fake or the shake and bake, where we go back and forth a little bit before anybody gets aggressive. So sometimes there's a trade, sometimes there isn't. When there is a trade, it often happens very fast. And so here's the open yesterday. And this is 1 minute bars. So this is what the open 5 would have looked like. We were right here, and that's the first minute. So it opened very strongly up, almost 10 handles there on big volume, big delta. That is a big, giant, flashing light. Okay, this is going one way and it's very aggressive. But remember the rules of HMOMO. You don't want to just necessarily jump in this. And the open 5 trade, you want to take with a market order. So depending on where you got wind of that in that minute, that's what really matters, where you'd enter that trade. So let's go look at that exact same point in time and look at it in 15 seconds. And you'll see it tells a very different story. And I have to get back there. Hold on. Oh, let's see. Okay. That should be it right there. If I'm not doing this wrong, that should be our open right there. Yeah. Okay. So that what we just saw happen over a minute, in 15 seconds, you can see how it happened. And so in this example, what you could have done is you could have joined that after the first bar, into the second bar, but it was pretty clear it was going one way. Then you got a pullback opportunity to join it, but this is harder to do than that. And that's the idea of the open 5. So, and let me show you another example too, because that was just one day here, and it's easier to find them on the 1 minute, and then we can zoom in if we want to. Let's go back another day. So here's previous day. This is Fridays. And look at that. That's what a gap down open looks like. Oh, excuse me, that is the close. Wait a second, we want the open. Here we go. All right, so this is an example of not tradable open 5, this one right here, where it opens and it doesn't really have a lot of direction and it's immediately going back and forth. And if we see this type of action, what we want to do is be really patient and try to pick off a high volume reversal at one of the extremes. So those are the 2 things I'm going to be looking for on this open. I'm going to be looking for high momentum that, is really clearly one way, that I'll just jump in and join it and see if it rocks and rolls. Now, that setup works best when there's somewhere to be going to. And, clearly the overnight high is way above us. We could be heading that way. So, it would be nice if there was UB up there to kind of confirm that. But, that's we have a direction to go if we do get some momentum. But again, having said that, if I look at the short-term action that we've had overnight and coming into now, it does seem to have a bit of a bid under it. We are going up, but this is by no means any sort of trending behavior here, except for the last couple of minutes. We've had a little bit of trending, and we had a pretty good downtrend going into that. When we were doing our session earlier and talking about ledge breaks. So this is not a really great setup for an open 5. And TRG people will see me post in the pit frequently. And I do it in anything goes. And let me find one example of it. I'll say, we should get a good open 5 today, or it looks like a good open 5. And when you see that, I'm seeing a setup where the odds are better because of the context. And searching through this with my speed reading is not the way to do it. Hang on, let me see real quick here. If I can find that fast. Open 5A. Okay, that should be an example. That's just an example of some P&Ls of it. Hold on a second. That's not what I want. I guess I don't have it in there as the open 5. I have it in as open, shake and bake. Yeah, this is a good example of an untradeable open. There we go. That's a perfect example of what an open 5 looks like when you don't want to try to trade it. See how two-way it is, and see how the wicks are at both ends? So that's a really good example of a bad one. I'm not finding an example of the good ones that I've posted. I know it's here, but it'll take me too long to find it. I'll try to find those and post a link in our Scalpathon stream so I can show them to you. But anyway, let's get back on topic. The bottom line is what we're looking for here is we either want a momentum trade that's really one directional, in which case we'll just jump in. And the reason we do that is because if that's happening, it's probably because the market's slightly imbalanced, and the value that we are at is not where we should be, if somebody's that aggressive. So we just go with it. And then, like I said, about 3 days a week, you get a trade. And when you get one in the open 5, it can be a great trade. It can be 20 points, 30 points. They go till they stop. But you really want to protect your profit, because if it turns out it's two-way trading and you get profit and then immediately turns, you want to take it. So that's why the tactics are to get a stop in as fast as possible and then just let it rip. Like I said, I've had crazy winners on those, and I've also had them turn around instantly. So manage the money. Okay, so that's one thing. The second thing is if we don't get an open 5, a momentum trade, then what we will do is we will look for a high volume reversal off of one of the boundaries of the range as the range builds itself. And if you recall, when we had our opening session on Sunday, I said that the Sunday reopen takes place over like 30 minutes, whereas the regular trading opens happen really fast. They get priced in really quick. So that's the beauty of it. If there is any mispricing, we'll see it right away. And if there isn't mispricing, logic just says, therefore, that the odds are the range is good. Therefore, we can play the range and look for reversals on the edges of the ranges. Does that make sense? Anybody have questions about that? That's our plan for the open, which is in about 15 more minutes. And that's what we'll do. I'm going to trade it live. I'm not going to do as much teaching. I'm just going to kind of take them and do stream of consciousness and just kind of think out loud and talk out loud. And, there may not be anything to trade. If it's a crappy open 5 and we don't get any reversals, I may not do anything. But I'm going to take my conservative I'm going to take my conservativeness down a couple of notches. I've been very conservative in the Scalpathon so far on the trades I've taken. We have a really nice little track record going. We're not making a lot of money yet, but more importantly, we're not losing any. And you got to think that way as a scalper, and so we'll keep trying to build the equity, which we're doing. We've got a little equity growth from yesterday, and just keep building on it. That's how you make money over time. Let's see. I give this is a great question. Jeff says, how much time do I give it? NQ plays the open 5 slower, which is really weird, but a good trade in the NQ sometimes sets up about 10 minutes in. So what I do is the primary open 5 energy is the first 5 minutes, but I stop looking for trades based on that after 15 minutes. So, but the longer we go, the less likely it is to be a good trade, because again, it's based on the opening imbalance. So, that again, just simply that equation in your brain and having that, okay, I'm going to let this play for a while and see if there's momentum. If there isn't, then literally by definition, what's just happened is you've let the range establish itself so that you can then play it from 6:45 on, or play it on the A period or B period. It sets up the rest of the open really logically and easy to stay centered on what your mission is. Because if you haven't already learned this, those of you in the Scalpathon, as the time of day changes, the setups change, and so you can't just be looking to do one thing all the time. And the opening is a very dangerous place to play the range. That's why the open 5A is a momentum trade. But after that goes away, or if that never happens, then by definition, you've got a good range. And you need to be alert to that and stop looking for momentum and start looking at ranges. And we did that this morning, and they're very different animals. You can scale into ranges. You can use a lot more size in ranges. And when you're trading momentum, you have to be much more nimble, in and out quick, take your profits fast. Don't try to scale into them, because that's so dangerous. And, it's just a different set of criteria, because it's about risk management. I can't tell you how long it took me to really understand when people say, good trading is about managing risk. I thought I understood that in 1980 when I had traded for 7 years. I thought I understood risk management. And then about a year and a half later, my portfolio, which I had grown from $1,500 to, at that point, it was $175,000. I lost it was more than half of that in one trade, one day, because I was getting so used to interpreting my ideas by how good the idea was, the potential of it, and not interpreting it by how much risk I had to take to realize that potential. And it was definitely a big aha moment in my trading career when I had the big loss. And I took a step back and looked at it and said, well, I get what I'm doing wrong here. My process is wrong. I see good trades, but I'm not taking account risk. And so that was like the beginning of the second phase of my trading education. And about the next 15 years, I really got married to understanding management of risk because, I was aggressive. I was trading a big account. I like to use leverage. And, that example was what can go wrong doing that. You can drop $150,000 in a day. And the idea wasn't bad. The risk reward was everything about that trade to me at the time, given what I thought I knew, made sense. But it didn't at all from the point of view of, to trade size well, to trade lots of money well. Guess what? You got to be really good at trading little amounts of money. Then it's just a matter of learning how to scale. And that's why I focus so much on technique in these sessions. How you execute it and how fast you can grow your scale is really up to you. And that's the limit on how much money you can make doing this, not, well, I'm trading the micros making $5 at a time. You trade 100 of those, make 500 at a time. I mean, all of this scales perfectly once you really understand the risk management side of the technique, because scaling will rudely awaken you to risk management. When you're a successful one-lot trader and you go to 2 lots or 3 lots and start making a couple of mistakes, you'll immediately learn about risk management. I have a student I'm kind of partially coaching who's doing one of the evals right now and is funded in another account and has not been taking my advice to avoid the minis and trade the micros. And she had a really good day last week and knocked the objective out for an eval in one day. And I was like, okay, that's really dangerous. And sure enough, got the funded account and blew it up already. It just because it's not proper thinking, not managing the bigger picture. Just the you only live once stuff. It's a great way to make a commercial for Lamborghini, but it doesn't build up your bank account over time. It just makes people think that it does. So anyway, we have about 10 more minutes. This is the time I don't trade. Going into the open, very dangerous. I used to do a trade right before the open called the 2 and 2. I would put it on right before the open with the objective of trading the first 2 minutes of the open. There was often a little head fake right before the open, and you could trade that head fake. And that was before order flow and liquidity information was widely available when I used to trade that. This was like the early 2000s, like 1999, 2000, 2001, that time frame. And again, that was called the 2 and 2 setup. And the Open 5 is just kind of a more refined version of that. And so for that reason, I don't trade right before the open now, but I do watch it because the information I used to get from it was useful. So the 2 minutes right before the open, watching the behavior of the order book and the price can be really interesting. People will kind of show their hands about what's going to happen at the open. So we're going to look for that. And then we'll either get the HMOMO trade or not, the Open 5. And then as time evolves, the farther we go from the open, the less I'm going to be thinking about that. We will keep an eye on NQ because it plays out a little bit slower usually, which is odd. It sounds backwards, but I like to play the open with ES until we've been open for 5 or 10 minutes. And that's the first time I will typically play NQ because NQ is just too crazy right before that. Just moves too much. When you're scalping NQ, you have to think in terms of blocks of prices and ranges. Like if you're trying to buy a low, you can't just, keep within a couple of ticks. You have to look, a range of 5-8 points to grab that area. And That's what makes it so hard to trade NQ. Well, you have to really let it come to you. You guys in TRG hear me say that all the time. You have to stake out a spot where, wow, if it traded there, I would really like being long or short in NQ. That's how you have to think. So here's NQ. Let's just look real quick at that. Rescale this real quick. Hate that I have to do that, but I'll shut up about it. Okay, so where do you want to play in NQ? Well, right now there was major supply at 200, which is way above us, another 40 points. And there's, major supply, I'm sorry. And then demand below us is like what, 148, 140. So, if it pushed down into this high volume node, maybe the bottom of that at 108, 112, maybe big fat whole number, 100, that might be an interesting spot to look for a move back into the range. And likewise at the other end of the range. That's how I look at NQ at the open. I don't get really married to individual levels just because it can move so much. I mean, right now, NQ is down 50, and we had a couple, last few days, it's had 300 point swings in each direction. So you can't just judge the momentum there purely. You have to look at the momentum within the idea of the range that the momentum is staying in. And that's a little bit different, and that's harder to do at the open. It's harder to do in general, but it's much harder to do at the open. I remember you said Surfer Guy uses 10 contracts on an open 5. Yes, he does an open 5 trade with the mini. He does up to 10 contracts. He will trade 1 to 10, but typically he either trades it or not. And, he might do 5 if he doesn't like it as much, but yeah, he does that trade and then he's done. He might stay in that trade for as long as the first hour, because often the open 5 becomes an opening drive and the trade will go on until the initial balance. It'll be a trending move, but that's rare. That's 10-15% of the days. So and he uses only a 15-second chart. This is the only thing he uses to trade the open 5. This is somebody I've coached. This is a friend of mine. We've talked about in TRG a lot. Surfer Guy, Surfer Dude. He's a professional surfer, which is why I call him that. He's also a world-class cabinet maker and really interesting stuff. Anyway, so this is all he uses, the bar by bar delta on a 15-second view, and just looking for momentum. And so what I do typically at the open is, we've got all this other information to look at, but what we'll do, when this actually opens in about 8 minutes, I'm going to do that. I'm just going to blow up the 15-second view, and let's just see if we can do it that way, and take the trades or not. It's a fun exercise. You know what we could do to make that? Hang on, let's make that easier. Real quickly, I'm going to make another one of these, and then I'm just going to make it real big so we can have it be emphasized. We don't need to see everything else. There, so that's what we're zoomed in on. This is the bigger picture of it, and then this is the thing you want to trade against if you're going to do this trade. And obviously that's just a duplication of this window, but the way I've positioned it, we can see all the indexes together, and then we can really focus on that one, which is what I want you guys to do. So really look at that and watch that during the open, and see if it at any point becomes clear to you that we've got overwhelming momentum one way or another. And that's the entry. You don't really worry about how far it can go, or you protect yourself by immediately trying to get a stop in. And if it goes against you, you don't give it much room. I'll flatten out pretty fast if I'm wrong in one of those trades, but I'll just use the flat button. No stops, no brackets on this trade, because they'll get hit. That's the problem. It can move so fast, you can get stopped out of a huge winner when you don't want to be. So like I said, I'll go in with a market order. And if we get a setup, and then I might use a target, with a limit order to trade toward to take profit, or I might just, more importantly, I like to get a stop under it, because if this trade works, it tends to go really fast far. And so, if you can just protect your profit as it's doing it and trail a stop, that's the way to go. I don't trail stops mechanically. I don't use the trailing stop feature in Jigsaw for this type of trade, just because I want to manage it manually. There's no logical way to do it. Sometimes you have to let it pull back more than others, and you just have to learn to get a sense for what the momentum is. And there's no mechanical way to game the momentum, because it can shift too quickly. a 5-tick stop or a 6-tick stop, we might tap that and then you get 40 ticks the other way. And that was really obvious that was coming, but your bracket took you out of a perfect trade. So I just won't do that. I will put really far away catastrophic stops in once I've got the trade up, and then I will immediately try to put them into protecting profit as fast as I can. So that's how we do it. Anyway, so we'll watch the action there and see if we can kind of do what Surfer Guy does. Okay, there's my 5-minute warning. Look at how we're totally in ebb and flow in this reasonably tight range right now. It's a 4-pointer. So that's not bad. That's a manageable range. So if we don't get an open 5 momentum move and we continue this ranging behavior, that's also good. Now we get some momentum picking up a little bit here. Remember, I like to look at it right before the open, about 2 minutes before the open. And there's a tell there sometimes, and I'm going to tell you what it is once we get to it. But you're looking to just see if there's some group thing that's sort of happening either in the order book or the way that the order book is stacking or unstacking. Just sometimes you can see something coming. I'll be right back, guys. I'm going to take a really fast break here so that I don't have to take one after we open. Okay, we are 2.5 minutes out now, and we're starting to see the little pre-open shake and bake here. Watch the liquidity. And look how the volume is really picking up. And is somebody on one side or the other? And how are the liquidities shifting? There's liquidity building underneath us. It's spotty above us. That's kind of what you'd expect. Look at the stacking and pulling in the book, heavily on the buy side. So if anything, at the moment, this looks like, a push down might be a great spot to nibble long if we start going up. So that's my interpretation right now. This kind of energy would be really hard to trade if we open like this. But if this can get us to an area like right down here somewhere, and then we open and come out of the gate from there, that would be a great spot to play long from. So that's my initial read of it before it's actually opening. The heck? Oh, this is all the way at the other end. No wonder that looks funny. There we go. Now it's in the range. Okay. All right. There we go. We have 1 minute. Lock and load. Very important to have no bias whatsoever if you're going to do this trade. You got to just watch this far left view here that we're looking at and just go with whatever happens. You know what we could do? We could put this over here so we can watch it and the liquidity. How's that? That's easier. And then I'm going to change the bottom from gold to YM for the open, or from oil to YM for the open. Okay, there. So we don't need to see old liquidity. This will be useful. We can see the current liquidity and see a blow up of the 15-second action. So we can see, like right there, that's what I meant. Can I push down to get long into the liquidity? That might be the long entry of the open right there. But that's what I'm seeing right now. It's pushing down into buying, but now the delta's picking up a lot. So we're probably going to drop. There we go. Okay, this could be a push down to get long into, or it could be the beginning of a down move. So let's see what we got. Okay, is there overwhelming momentum in one way or another? It's to the upside right now. That's what we were looking for. I could have already joined this. I'm being a little too conservative again. I would have hit market order a minute ago. I didn't. Now I want to get a pullback a bit. So let's see if we can buy 55 or 57 the quarters. Probably won't be able to get a market order in here, which is late. And yeah, I've traded this very poorly. I should have joined that earlier. So it still looks one way to me. So I'm going to see if I can get the entry I wanted before on one of these other ones that trying to fill there. Okay, we got filled at 57 and a quarter. So now we've got 2. Now we can take profits fast on the first one. There we go. Now we can try to protect this quickly. Let's get that target out of the way. Protect it. There we go. Now we're in good spot. We're long 57 quarter. It's trading 60 quarter. I'll protect it from 59.50. There's 62. Protect at 60. Okay, there's 62, protected 61, get that target out of the way. See how fast this happens? Okay, boom. We got, with an MA of 11 on a 2-lot, we made $17.50. So average entry was at 57 and a quarter, and we exited right up here at 62. And the trade's continuing. I just was putting on good discipline and taking profits. So that's an example of what that trade's like. It's still going. I'm still looking for a long entry here, but again, the first entry I chased it because I had to, and with the idea I could add to it on the way back. This is still long. It's still one way. There's still really clear spots to lean on to try to do this again, but don't get married to the fact that we're going up now. Remember, this can change quickly at the open, but clearly the buyers are running the show at the moment. That could change really fast, but that's what's happening. If you want to, you can put up a 30-minute and just kind of keep a track of if there's UB, and where the pullback is going. That's useful. There's a stop run at the low here. There's big delta there. Where are we? We're on negative delta, positives above us. The shorts are running the show right here. This could be another long entry. That's worth trying. I am long 57. Might have to get out of the way here, but I think it's going to work. I just got to give it a second. There we go. Let's protect this one fast. So we're going to get a stop under there as quick as I can. Do it. It's not going to let me do that. All right. Might be offsides on this one now, or it just might be a better entry. Let's play it that way. Let's play it as a pullback to add to. I could get blown out here to the low, but I don't think so. I think I'm reading this right. Yeah, here we go. Okay, let's get the first one off quick. Now let's get that one out of the way and let's try to do the same thing. Okay, couldn't protect it. I got 4 ticks out of that one and 3 ticks on the first one. So, we made a few more bucks. I mean, we haven't had a loser yet, but this is starting to get, see now that this is no longer one way. Now we're at the bottom of the range and it's 2-way. And so the open 5 is pretty much over here, even though it's only been 3 minutes. It could still be a long, but I want to see the aggression that I was buying reassert itself really soon here, or it's not there. That's the end of it. And it's looking like that right now. Like this is a spot where if they don't step up here, then for the next few minutes we're going to want to stay on the sidelines and let the range build. And that's what's happening. It's building a range. It's no longer HMOMO up. Trade's over. And we had some really nice winners in there. That first one, heck, 4 points. Can't complain about that. Okay, let's let the structure play out because at the moment there's UB at the top of this rotation and the stops run at the bottom, and that's just sloppy. And the deltas are the wrong way around, so it's just way too early to look at structure. So we no longer need our big blow up here, so I'm going to just get rid of that. Now we can just watch everybody. And so that was a cool little open. We grabbed some points. It took virtually no risk. Now let's let it give us more information. I'm not convinced that this is a market that's going to go either way aggressively right now. It looks like it wants to build a range. And so I'm going to let it. It took me so long to learn this, to stop looking at indicators and stop thinking, well, let's see how 50 trips, screw, black out the prices. This is one of the exercises I tell people to do on your dome or on your chart. Just black out the prices so you can see the action, but you can't see what number it's at because the number's irrelevant. This is 60, 50, 70, 80, 90, it doesn't matter. The point is that what's going on around it, that's what we're trading. And the actual price is irrelevant. It gets relevant if it's an IP or a big fat whole number, later on. But right now, this remains a long, but it's a sloppy one. Hard to stay long in this. Again, the open 5 was a really nice little long trade, and it's continuing now, but the momentum, well, now it's picking up again. So no, this is a good little move here. I'm not going to chase this one, though. Definitely not going to chase this one. It's two directional. See how we're getting sweeps back? And now it's got momentum, but it's going to be really hard to stay in this because of this 2-way stuff. And what that means is the dominant energy of buying is now running into some sellers. That's why it's getting 2-way. And there you go. That's why you can't just sit long. We just had a sweep from 67.5 to 65 in less than a second. And so there's just no way to manage your profits or to manage risk. So let it settle. We got the open 5 trade. It did what we wanted. We didn't have to take a lot of risk. it's a good time to take a breather and, see what's going on in about 10 more minutes after this quiets. If it does, it may continue to be an up and be a trend day. It's possible looking at the action, but even if that's true, we'll have plenty of opportunities to join it, and there's no rush. So if you look at just the 15-second blown up, you can see there's all that buying energy, and it's not like it's over. It's just, we had a decent amount of selling energy come in there, right? And that's why I wouldn't just be, trying to work this thing long. You could get swept into that really quickly, like we saw. It's funny, once you get really good at doing this, you'll trade less because you'll realize where the good opportunities are. And I remember whenever I was using indicators, I always traded more because the signals, you got to take every signal, and that's just such a fallacy. Not every trade setup is of equal quality, and you don't just take every one and then hope the odds work in your favor. That's such stupidity. They are different. You got to let them be different. Like this is a really hard to stay in long here, and I'm just not going to chase it. But if I get a good entry somewhere, I'll jump in. This is definitely sit on my hands patience here, because obviously we're going up, and it's continued nicely from my 57 entry there. But you never say shoulda, coulda, woulda. You got profits. You're safe. You're on the sidelines. It's like think about being in war. In a war, it's not how many of the enemy you can kill. Obviously you're trying to kill enemies if you're in a war, but you want to do that and stay alive at the same time. And staying alive is the priority, not how many enemies you kill. And you have to think that way in trading too. Surviving scalping is rule number one, preserving your capital. Look at that sweep we just had, 74 to 68 3/4 in one burst. I mean, that would have swept, no matter where your stop was in there, you would have been filled at 68 3/4. And that was for what? That was 750 contracts traded in that one burst in a heartbeat. And it got bought right below there. But, that's the kind of motion that will take you out of a good trade and then go right back to being a good trade. And I hear people all the time saying, how do I stop that from happening? And the answer is, well, when the market's trading like this, you can't stop it from happening. You have to stay out of the way of it. And under these conditions, really hard. This is a long that keeps sweeping down. So what does that tell you? It tells you it's a very risky long. So unless you can get really sweet spots to get long, look, there's another sweep down. We've not seen a single sweep up. Have you all noticed that? Every single sweep has been down. That's why there's another one. Very dangerous to be long. But we're going up. That's the contradiction. That's why trading is hard. But the process you're doing is actually very simple. You just have to learn to just do the process and stop thinking. Stop thinking you're smarter than the price. The price is much smarter than either of us are. It's telling us exactly what we need to know. So just listen to it. Listen to the story. The story here right now is there are sellers that really want to sell above us. And every time we get close, they say, that's good enough. And they throw 500 or 700 contracts at the market. Do you want to be long into that? No, because then, you're the fool at the table if you're long into that happening. But that doesn't mean there isn't a good trade either way. It just means you got to be really risk averse. Okay, so these open pipe trades are still harrowing. Yes, they are, but once you get the hang of how to play them, and if you play them, loose enough, they're kind of fun. And one of the things that Surfer Dude, I asked him about this, and he said, my perspective, since I don't know anything about trading, which is true, he doesn't. He said, I just look at it this way. If I can look at it in terms of how much money I can make or lose, and I just keep it really simple, then it works or it doesn't. And and again, he puts it in the same context of catching a set of waves when you're out waiting for the next wave. You look at it and you say, is this a good one? Yeah, maybe. All right. Sometimes it's too good. It's too big and it crashes and breaks your board in half and you get hurt. Sometimes it's perfect and you get a great ride. And, it's just a matter of looking at the wave and saying, is this the wave I want? And he learned that by literally just by looking at the patterns and not trying to overthink it, not trying to understand order flow, not trying to understand unfinished business. He doesn't know, he doesn't have any of that. He doesn't have domes. He has this chart. He's trading off this right here, and just chart trading. And it works. I've watched him do it because he just doesn't overthink it. And, for the size account he's trading, he can trade, the 1 to 10 minis. Typically 5 or 10 is what he does. It's either half or all of them. And, and he knows if I'm wrong, it's X amount of money, and that's fine, because most of the time it works. And he's very zen about it for not being a trader. And that's a really cool thing to see. But it's very atypical, he's good at a lot of things in life because of that too. But this is a guy who didn't graduate from high school, and so he's got a very practical view of the world, which I think is part of what makes him good at doing that, if that makes any sense. Look at this push down now after those big pushes up. And remember, we've had lots of sweeps down, no sweeps up. So I'm wondering if this isn't going to be a short break the ledge trade coming up down here at that 50. Remember how aggressively 50 was trading a little while ago? Well, it's not that far below us. So this is an interesting idea right now from a price action point of view of being short here with a very tight leash. So I'm going to start thinking about that idea. It's obviously totally opposite of the idea of the long, but it works with the sweeps down. So maybe if we get up into an area where the risk of trying that short is relatively small, that trade might be a good idea here. And so if we start getting sweeps up, then I'm definitely not going to try that either. And so far we haven't. We've had sweeps mostly be either really tight, inside market sweeps, or they're going down by a lot, like 8 to 10 ticks. And so, that tells you there's pressure on the sell side of the market to push it down, but it's only showing up at certain spots. That's why you get that behavior. They're not just putting their foot on the sell gas and just saying sell, 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 sell. They're saying sell, and then they're backing away, and they're sell, and so they're choosing their spots just like we are. So it's not a very aggressive type of selling when it's like that. Okay, so I still think this could be an interesting short ledge break, but we can't do a ledge break trade now. Why? Because there's a high volume node between here and the ledge, number one. Number two, we're nowhere near it. Number three, we're not going that way. So that's how you, if those three here are true, then the ledge might be interesting to play. But right now we're in the middle, and it's not trading convincingly either way. I still think the low end ledge break is probably going to be a good opportunity, but it might be a while before we see it. Let's just watch it. And remember, in terms of times of the day here, we're still not even at 6:45. So we haven't even had 15 minutes yet. And so, as the market stays open, we're going to get more and more information to work from. But if I had to just pick something that's going to happen next here, I'd say this is a short and we're going to go play at 50. And I'm really tempted to just put that on here anyway, because it really looks like that's what's happening. Let's see if we can get a good entry on that. It's trading toward this liquidity, and I don't want to be the guy that sells it right into that liquidity. That would be stupid. So let's see if we can catch a pop-up to get short into, maybe 65. I just put an order up at 65 just for that idea. And so is the liquidity. They just popped in there too. That's pretty funny. I don't know if it's going to get that far. This idea probably will continue going down before 65 if it's true. So maybe 62.5. Again, I'm just kind of trying to poke a spot that I think I might get a fill that's low risk, because I think we're going down, but I just don't want to try to sell the low end of the range here. And that's where we are. So you're literally watching me thinking out loud on this. This is a short setup that I just don't want to be the fool in, but it looks like it's going to go down really hard here. I'm tempted to take a market short. I'm going to do that. What the heck? Let's see if we can catch it and maybe put on a better trade at 65. So that's the idea here, and we'll trade it to the other quarter. So there it goes. Boom. I didn't fill fast enough. Shoot. Okay, well, I got some of that. I didn't get all of that. It traded to 58. I just didn't get my order in fast enough. No, I don't want that one. So, okay, that was a really good example of that short playing out, but it played out really fast. So managing your targets and your stop, if you have one, is important. So we got that, but we didn't get nearly the potential of that trade. That trade had about 8 ticks, and I got 3 of them. But I'll take it. Again, I didn't lose money, so that's the right answer. So again, this is a very, very dangerous but obvious short opportunity here for this ledge break. And here it comes again. See, it keeps shooting down, and now we're starting to see some sweeps up. So if you can stay short here, this is what you want to be, because I'm pretty sure this is going to go, or at least get into play. But you got to get good entries. That's so critical. And where are good entries right now? 60. That's the first place I'd try again here on this concept. And it's too far from, we're too close to the bottom of the range even for 60. That's not a great trade, but if it fills, we'll go ahead and try it. So I'll leave that 60 and a quarter there. And just, it's a little tiny overshoot of 60. Okay, here it comes. It's going to come up and fill me. Let's see if we can get this. I don't like that spot anymore. Nope. Sorry. I think we're gonna trade a bigger range in here, and I'm not willing to take that risk either. So if we push up, if we have a sweep or a push up that starts getting sold, I'm going to join that. That's for sure. And then if we get a little closer, I'm going to go ahead and get short for the ledge break anyway, just on the momentum. But right now we don't have the momentum. I want to see it's 52, 52.75. I want to see us, oh, wow. Below 55.75 and going down hard. That's probably a good entry on that. Here it comes. Okay, let's see if we can get it. I am short. And see if we can catch some ticks here. Oh, let's just go for, let's just had it again. Didn't move fast enough. Okay, let's just go for a point. I might have missed that trade, but I don't think so. I'm gonna stick another one in there. So now I got two. And I might be off sides here, but I don't think so. Let's just get, well, now we're off sides. There's an up sweep right to 60, which is where I really wanted to sell. So I'm not going to add to it, but I'm going to see if this plays out. Yeah, I might be really off sides here, though, and this will be a good example of how I'm not going to add to it and try to fix it. I just want to see if I truly am off sides or if I just got caught. And I'm off sides, I think, here, but wait another second and see if that's truly the case. Sometimes your first reaction can just cost you money. But right now this is going to be the biggest loser we've had if I take it. And I'm just not convinced I'm wrong yet here, because I got caught in a sweep and we're looking like we could still come down here. So let's just manage this carefully. And again, I'll just hit flat if I do decide to get out of it. Very difficult setup here. Yeah, it's going to go up. At 65 is kind of my line in the sand here. That was the spot. 60 to 65 was the spot I wanted to sell, but it's just not. Yeah, it's going to go up more, I think. A sweep down right now would be beneficial, but that's kind of a hope and pray situation, isn't it? Come on, here we go. All right. Well, tough read, guys. Here, really tough read. I'm giving it my best experience, but I could be quite wrong here. Let's see what's going on structurally. Stop run at the bottom. Yeah, I'm not in a hurry to get out of the way as long as it doesn't go much worse against me. This could actually be just a better entry, but if it starts going up anymore, I'm going to have to hop out of the way. I'm going to be one of the stop outs here. So this is why you got to play in micros. In a mini, this trade would be underwater by $900. You can't do that. So, but it's acceptable risk here. It's still less than $100, which is nothing. And, we're letting it play out. I'm still not convinced we're not going down. I'm not going to just take the loss here. There are losses already there. So now it's just a matter of, am I reading this right? And it's just really volatile, because that's what I'm thinking. I'm still thinking we're going to push down. Look at all the selling in here. It's not conclusive enough. I'm taking a trade that doesn't have a great setup. And I said I was going to do that. I was going to be less conservative. So you know what I'm going to do here? I'm going to add one more to this. I still think this is going to work. We'll put targets down there. I don't think it's going to pop, but if it does, I'll get out of the way. That's all. I got my finger on the flat button. It could puke here. We could puke out all the shorts, including me. And we'll give it a line in the sand here, right around 67.5. So that's where I'll get out, but I won't use a stop. I'll just hit the flat button. Yeah, I think this one might be blowing up. Let's get out of the way. Okay, we'll just rethink this from the very beginning. This is not going to be an easy day to trade. So let's let A period end and see if we can get a clearer picture. Because right now this is it looked like a strong long and then lots of selling, and now this is a cover the stop out short reaction here. This is not a long. It's just the shorts can't afford to stay short like me. And I couldn't. And I still think it's a good short setup. I just don't want to sit in it and be stupid or add to it a lot and give you guys a bad example. But I still think this is going to go down and test that low. So we may get another shot at it here, but I'm going to be aggressive when it's appropriate and not while it's litigating it here around here, because this big giant range it's in from 60 to 69, and it's going two ways in there with big sweeps both ways, and that's just, we're not going to get an edge either direction. So let's stay with this here for a second and see what we get. I want to see if there's anything structural that's giving us a clue. I don't think so. I looked a minute ago, but let's see. We're above max delta, so obviously the longs are in charge here, but I think it's stop out longs. I don't think that's anybody really being aggressive. Nope, here we come down again. Okay, so that I took that loss, and now it would have been a break even right here. So you got to do that and just not look back. No shoulda, coulda, woulda. But this is definitely a very interesting setup. It's just not going to make it easy. I think that ledge is going to go. And here we go. There's momentum. We still have to get over the high volume node again. What's binging at me here? Something's dinging at me. Do I have a connection problem? No? All right, whatever. Let's go ahead and watch this. I think this downside ledge is going to go. Okay. I took a short there. Let's take profits. God, it's moving fast again. I had profits and then didn't have time to take them, but I think I'm going to get a chance to do it. I think there we go. Okay, now we can protect this with a buy stop. Whoops. Let's get a buy stop in there. Okay, we got filled. That was a nice profit. We got about 10 ticks out of that one. I'm sloppy on my mouse. I apologize. I'm just getting tired. I've been doing this most of the night now. Yeah, there's the ledge break short playing out. So I shouldn't have closed out my trade, but I did it to protect myself from a bigger loss. And you got to do that sometimes. That's all. But clearly it's playing out now, and we profited from the second bite at that apple. Now, now it's dangerous to play either way, because we broke that ledge aggressively and now we're back in the range. So that trade has filled its potential. And now let's go ahead and wait for the top of the hour, which will be the beginning of B period. Okay, to the questions. If the entry was at there. Yeah, exactly, Lance. Exactly. I'm not sure I understand your question, Elena, because I don't know exactly when you asked it. So if you could ask it again and maybe elaborate just a bit. But in general, oh, you were asking about that entry at the first second bar on the 15. Now I know what you were asking. That would have been right in here. Well, the risk is always, it's dynamic. So it depends on where the current liquidity is and where we've traded. So that's not a good question to answer. Risk is real time. Risk is not based on prior traded volume. You can estimate it based on prior traded volume, but you have to look at it real time. Okay. And again, that's why the setup is just you get long or short and you immediately protect your profits. That's how you control risk. You don't try to predict where it's going. And that's why it's such a pure, clean momentum trade. Okay, so anyway, we got a perfect ledge break of 50 all the way down to 46.75. So that turned out to be a really good trade. And like I said, I got spooked out of the first attempt at it, but that's okay, that happens. And I didn't trade the second attempt as well as I could. I was mouse clumsy, but we made some money. So let's look for another setup here at the top of the hour. And remember, this particular session that we're doing right now is the second one of today, and we have a very specific mission here for this. Let me just bring up the schedule here so you guys can see it. We are on the Zoom. Okay. This is the open 5, and I generally will do this, only for about 45 minutes, because then the open 5 is over. And so what we're going to do here is we're going to, go to 7 o'clock, which is, the top of the hour. We'll see what the start of B period looks like, but that's really the trade I wanted to show you. And, that one right at the beginning, and then the really good fade that I got spooked out of and then re-entered the second time for the break of the ledge, which is one of the setups we love, is a ledge break. And it was a really clear one, and it did it really nicely both times. So those were some good examples, and those are over now. So I don't want to just, spend time talking about whatever. So what we will do is we will wait. It's 5 more minutes. We'll let that play out, and then we're going to wrap up this, how the open is traded and the good examples we saw of the ledge break. So if you have any questions, now's the time to start formulating them, because I will start answering them in about 4 minutes. Jose, to your point about the open fives being harrowing, again, if you look at it in the context of the size of your account, and just play the odds, that's another way that Surfer Dude has kind of gotten to zen with it, as he would say, and we would laugh about, is that, it 3 days, if you look at the opening few minutes of every day this week for the ES, and then go back and look at that for, go back 6 months and look at every opening, and you'll see that typically 3 days a week or so, sometimes more, there's a really clear one-way move, at least briefly, that you can join. And so that's a really predictable way to make money in a very short period of time, every day at a very specific time of day. And so if you look at it that way, and if you have a small account, do it with micros, make $100 at a time. If you have a bigger account, what Surfer guy, he's a professional surfer, as I said, but he also has a cabinet business that's quite successful. And he just basically looked at this and said, yeah, this is a cool idea. I'll put $100,000 against it. And that's what he did. He's got a $100,000 account, and he trades 0 to 5 or 5 to 10. And, it's 10 contracts, $50 a point, right? So that's $500 a point. And, with a $100,000 account, that's nothing. So he doesn't think of it as harrowing. He just looks as I make money or I don't. And it's a really nice little secondary income stream for him. He can have a $5,000 morning before he goes to work. And, he'll say, screw it, I'm going surfing. Again, so much of this is about not letting, your feelings really influence you. And if it feels harrowing, try to figure out, either don't do it and do a different setup, or try to figure out how to make it just be fun. And monopoly money, and that's the beauty of trading, for example, in a evaluation, or in using a prop firm money, is you can truly just trade the action and not feel like there's money involved. The money can be secondary, and that's a huge emotional advantage to be able to do that. So when, you're right, it's a harrowing event and it's difficult to trade, but that's why it's a really good thing to kind of practice and do play money, and do with sim money, and do with combine money. And, ultimately, some people get good at that trade, and the ones that do, you can have a very short work day. Like I said, he trades pretty much the open, but into the first hour, is the longest. He'll trade to the initial balance, because sometimes you get what's called an opening drive. If you look up market profile, an opening drive is where we just open and just keep going one way. And, think about it, if you catch an opening drive right at the open with an open 5 trade, and it just keeps going, you can make ridiculous money on a trend day. Just be mindful, again, that trend days just don't occur that often. 15% of the time is typical. So, 15 days out of 100, we get a move like that. But boy, if you happen to be in that one, that makes your year. And so that's kind of the point. It's a very simple thing. When you're wrong. The one that I had to stop out of, I was fairly convinced that was going to work, but I didn't want to scale into it a lot just to make it work, just to prove it to you guys. So instead, I decided to do what I told myself I was going to do for this session, this Scalpathon, which is I was going to act like a good trader and not be aggressive. And so I took the loss and then made some of it back on the second attempt, and now I still have to make a little bit more of it back, but that's better trading, because I stopped myself from having an even bigger loss, which would be what would happen to most new traders. So I'm trying to keep in mind that it's a harrowing event, and trade it like I would do if I was coaching somebody else to do it. Because one of the things that you do when you get experienced, and you'll hear people say this literally in every trade on the planet, you develop a skill at something, whether it's carpentry or trading or whatever, and there's certain things you just know intuitively, and they're blanks. You can't explain them. It's like the heart surgeon that can, tie the sutures with one hand. I've seen heart surgeons do that. And it's like, well, I've done it 12,000 times. Okay. Look at this sweep, or this short squeeze we're getting, by the way. The reason that's happening, number one, it's top of the hour. So we're starting starting B period. And there's also an economic event that just happened. I meant to mention that in advance. ISM numbers came out, and obviously they were positive as far as the market's concerned. This could be a good place to play short because it was news and news gets faded. Let's do that. Let's play short here. Just to show how you can pick off ticks doing that. So I'm short 60.5 here. I'm late to that, but boom, I just got 6 ticks just doing that. You can fade news events almost all the time, as long as it's not something that's going to change the world. This isn't going to change the world. This is just a number that's slightly positive, and it caused the shorts to cover. And you could have traded that long. I was saying something else would happen, but now it's a really great spot to scalp short. It could continue, so you don't just hold short. But look at this. That entire news event's retracing, and this happens all the time. We're going to talk about how to trade news on Friday. That is the actual topic of the NFP session, which is the biggest news event of the month. And but this was a really good example of how you can fade news. Does everyone understand that? That's called a fade trade, where the market takes a sudden reaction to an announcement or to news, and you just let it play out and then get on the other side of it and just write it back down. I did a little of that, but again, I'm erring on the side of teaching. Whether I'm trying to or not, I keep going back to teaching instead of trading. Oh well, that's my disease. All right, so I'm looking to see if there's any other questions or comments, and there are not. So this is the time that we were going to wrap this up. I'm going to ask Burning Desires, any final questions? Was that useful? Did you learn something? That should have been useful for understanding how the open plays out and how a news trade plays out. We just saw that too. So does anybody have any questions or comments before we wrap? Cool, Jose, thank you. I appreciate the feedback. Thank you, Elena. Cool. All right. Well, this is, we're going to be a wrap here. Once again, just to review the schedule, the next thing up for the Scalpathon, there's some other things going on in TRG, but for Scalpathon, the next thing we have up is tomorrow. And what we're going to do tomorrow, which is Wednesday, we're going to do the initial balance and the edge and ledge break. So we're going to start later. We're starting at 8 o'clock Pacific, and so the market should be a lot quieter. We should have an initial balance, and we should have pretty clear, the ledge break should have happened already, the big ones at the open, like this stuff we're getting now. We're getting another one right as I speak, and there it goes. There's another one. Perfect place to play. So watch for those. Why is it perfect? It's below the high volume node. We were going that way, and we got within 8, 10, 12 ticks, and so we took it out, and it created a good long trade back into the range. So we're going to do that a lot more, but we're going to do it later when the market hopefully has quieted down, assuming that tomorrow is the nuclear bombs don't go off or whatever. So that's the plan for our next session tomorrow. And if you have any questions, stick them in the question stream or the question topic of our Scalpathon stream. We put an open Q&A right here, so just put them in there and try to be as specific as you can, and I will make every attempt to answer as specifically as I can. And that's that. So cool. Thank you, everybody. Awesome, Jeb. I really appreciate that. Thank you, Jeffrey. Today we had an A to overnight. We did not. Well, let's see. I don't know. We talked about it. Are you talking about for oil or for ES, Alfredo? Let's look. No, we're nowhere near. Yeah, we're nowhere near the overnight on ES. Look, this is the session here. The blue is the top and bottom of the session, and the overnight's way down here at 22, and the top is way up there at 90. It's actually higher than that. It's just under 4,400. So no, we have not had it yet. And yeah, this could be interesting. We could go to one of those boundaries later on. But right now, the market is really happy right here. So this could be a really tight little range inside day. We could stay totally inside the overnight and inside yesterday's trading. And what would that mean? This is, again, a really important point. That's what consolidation looks like. So look at the TPO here. That's really likely, that we just stay inside the previous day, the overnight in the previous session. That's called an inside day. And the only thing that is really interesting with this idea of continued downside ledge breaks is we do have a poor low below us down at 1310, a poor weak low. So, if we do break out of the range, certainly that might be something to trade towards. So that's how I would interpret the day right now. I would be looking for an inside day to stay. If it breaks the initial balance, I wouldn't expect it to do it by much. And if it does do it to the downside, then maybe that low is in play. So that's my take. Does that answer your question, Alfredo? Yes. Okay, cool. All right. That's it then. We'll wrap this up and I'll see you guys tomorrow morning a little bit later. Again, 8 o'clock Pacific for a little later in the day trading, hopefully a little quieter. Maybe we can, I'd love to be able to trade some size in ES during this, and throw some 5 lotters. Well, in the eval, I can do up to 3 lots. So we'll trade 1 to 3s, but I just don't want to do it with these wicked sweeps and end up blowing up the eval or showing you guys bad habits. The correct habit here is this is too sweepy to play the mini. You're taking too much dollar risk, even on a 1 lot. You could trade 10, 20 micros, and that's much more manageable because you can go in and out, 3, 4, 5 at a time. I hope that makes sense. All right, guys, we'll see you tomorrow. Have a good day. Stay frosty, stay cool, and learn, let this stuff soak in, and practice if you like, practice, practice, practice. All right, see you later. Thanks.